Hi traders, today I will show you a strategy that many underestimate, but in vain. It's one of the most accurate strategies using the Bollinger Bands indicator. If you want to trade with a plan, not just a guess, watch until the end, because it's simple but works. In trending moves, the price doesn't go in a straight line, like here. Most trends have regular pullbacks and look like this. Prices are made by higher highs and higher lows. The problem is that pullbacks often lead to fake signals. Here's an example. Let's say you use a 20-day EMA indicator. If the price is in a strong uptrend, the EMA line gives a great signal after a breakout. But if the price is stuck in a sideways range or the trend isn't strong, it becomes a big issue because it gives lots of false signals. That's why Bollinger Bands are a great tool. They can spot the trend direction using those pullbacks. So, they give fewer fake entry signals. The bands are super easy to use. We've explained how they work before, and since we're using them in this strategy, let's recap. The indicator has three parts: a 20-period simple moving average, SMA, in the middle and two lines of standard deviation above and below. When the bands squeeze together, it means the market has low volatility, like things are quiet. When the bands widen, it tells us the market has high volatility, like things are heating up. When using this indicator, a common mistake traders make is treating the bands like overbought or oversold signals. So, they sell when the price hits the upper band and buy when it hits the lower one, which leads to lots of errors. Let me explain why that's not the best approach. On the chart, we see the Bollinger middle line sloping up, showing an uptrend. Now, the price breaks the upper band and keeps rising, meaning you'd lose money. Using the bands for overbought or oversold signals means you're trading against the trend, which isn't a smart move. Now, we'll show you the most effective strategy to use with this indicator, based on the Bollinger Band squeeze. This strategy uses price breakouts with volatility. You need to know that market volatility changes all the time, and whenever the market has low volatility and the price sits still, it can lead to big price moves. So, our goal is to find a moment of low volatility and predict the next price move. You can do this by spotting a range where the price is moving or checking if the SMA line is pretty flat. Next, the two bands should be close together. You can make this easier with the BBW, Bollinger Bands Width indicator, which shows how far apart the bands are. If BBW is low, it means the gap between the lines is small. If it's high, the gap is big. To predict a strong move, wait for the bands to start widening, which you can also see with a rising BBW. This widening means volatility is increasing, and a price jump is likely coming. Our next step is to guess the direction of that jump. We do this with price action. Here's an example. On the chart, we see the price moving sideways, a flat SMA, and a low BBW reading. Then, the bands start widening, which you can also spot with a rising BBW. After that, three red candles form. One closes below the lower band. Based on how the price is moving, the breakout will probably go down. That's a good chance for a short trade. Why you waste time trying to grow a small account? With HashHedge, you can trade with real capital up to $100,000. It's simple, take the challenge, prove your trading skills, and get funded for real. Keep up to 90% of the profits. You don't need bigger profits. You need bigger capital. All the details are in the description below. Let's look at another example. On the chart, the market is in a range, shown by a flat SMA line and a small gap between the bands, confirmed by a low BBW. Then, the bands start widening, and BBW confirms it. Next, three green candles break above the upper band. From the price action, the breakout will likely go up. That's a good opportunity for a long trade. But remember, a breakout candle doesn't mean you jump in right away. You need to wait for signs of rising volatility. Another indicator that can help confirm the breakout direction is the money flow index, MFI. Let me show you how, but first, change the MFI setting to 50. Now you have one line in the middle. If the MFI line crosses the MFI middle line from below, it's a bullish signal. If it crosses from above, it's a bearish signal. Now, let's combine this with the breakout strategy we shared earlier. Let's go back to the previous BTC chart, repeat what we said, and add the money flow index. We see the market in a range. Then, the bands start widening, and the BBW line rises. Below, we also see the MFI cross the MFI middle line from below, giving a bullish signal. Plus, three green candles break above the upper band. All these signs suggest the breakout will likely go up. So, it's a good shot for a long trade. Let's try another example, the BTC-USDT trading pair. The chart shows sideways movement. Then, the bands widen, confirmed by a rising BBW. Next, the MFI crosses the MFI middle line from above, and red candles form, closing below the Bollinger Band. From this move, we can tell the breakout will probably go down, so we take a short trade. Great, we've learned how to enter a trade, but how do we exit smartly? I'll share an effective exit strategy to maximize your profit. Say you opened a short trade and want to ride it as far as possible. Close the trade when the trend weakens and before a candle breaks the Bollinger middle line. That's your exit point. You do the same for long trades. It's that simple. Please like and subscribe to the channel to see more breakdowns and cool strategies. Here, you'll become a trader who makes money. And remember, if you want these trades to bring real profit, not just pocket change, it's simple. 4% a month on $1,000 is $40. 4% a month on $100,000 is $4,000. You're not chasing huge returns, you need more capital. That's why I work with HashHedge, a prop trading company that lets you trade with their money, not yours. You pass a simple test, prove your discipline, and get access to an account from $5,000 to $100,000. Risks are controlled automatically. You can't blow the account, the system won't let you. This is the discipline many lack. So, if you want to trade strategies like this with real capital, try HashHedge. Link in the description.